Okay, we are just gonna get started. Quick audio check. Okay, audio seems to be good. Just a quick general advice and risk warning disclaimer. We don't have a lot of time, so we just jump in straight away. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFDs and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so let's switch. We don't have a lot of time until the US retail sales number, so we do expect a little bit of a volatility coming in very soon, in about 30 minutes time. Just want to give you guys a quick update on what's been going on with pound USD, what's going on with the market, why it slides in the past hour. So couple of news that we have today. We have the RBNZ rate decision. That was a 50 basis point hike. And key event for the day would be the UK inflation rate year on year. Expected consensus was actually a jump up from 9.4% to 9.8%. It printed 10.1%. Now, this is where the logic is a little bit off, and I need to explain a little bit about stuff going on with recession and inflation going on. Core inflation expected to jump up to 5.9%. It jumped up to 6.2%. So if you just go by the CPI numbers, it would fundamentally means that this is actually positive for pound, right? It should drive the sterling up. But we're not seeing that, and part of the reason is that there's actually two options. Number one is that you would take this as a bullish sign that the Bank of England are going to be a little bit more hawkish or maintain their hawkish stance. The second option, and this is basically what's confusing the market right now, is that there's a potential for a worse global recession. So this is basically what's driving the risk off a little bit just now. It doesn't affect safe haven assets as per usual. It only affects how the dollar is, just because how the FOMC stance is going to be. So again, let me just explain a little bit. You're not the only one that is a little bit confused with how the market views all this data right now. We are just actually coming to terms with it. From an analytical perspective, from a fundamental perspective, we are looking at two possible outcomes, right? One is that the concern for inflation is there. How hawkish the central bank is going to be, that's gone. Right now, that's gone. I think the concern right now is for a global recession. We got a little bit of a clue last Monday with China's industrial production dropping down. We have a little bit of a clue with how China's cutting rate. It's not really huge. It's only 10 basis points in China. But the impact of what happened on Monday was for a concern that there's a slowdown in China. Global recession could happen. It's not just confined to the United States. So this is a concern right now, and that's basically how the market sentiment is being driven right now. The concern is no longer about the inflation. There's a concern for a potential for a global recession. Okay, that's number one. The other part on why we are looking at this kind of a drop in risk assets, it's also because of the market waiting for the FOMC meeting minutes tonight. Just to give you guys a bit of a clue, it's gonna come in 5 hours time, I believe. What the market is looking for is actually how the FOMC's view is towards recession. That's number one. And that's basically going to be what the market's going to come through the FOMC meeting minutes. Number two is how strongly committed are they to continue hiking rates aggressively. Okay, so those are going to be the 2 pointers for the FOMC meeting minutes. Please don't spam. I'll get to what you're requesting soon. Okay, I'm just explaining a little bit about how you should be careful with the fundamental that's coming out. Don't take it at face value. There's always context to fundamentals. That's basically what it is right now. So FOMC meeting minutes, I think the market's still waiting for that. In terms of the volatility today, we're not quite done yet with it. If the FOMC meeting minutes show signs that they are concerned about recession, and they might slow down with the interest rate hikes, then that's actually going to be bad for the US. If, however, they strongly emphasize that their primary objectives is price stability, that means they're going in for inflation regardless of how the recession's impact is going to be with their rate hikes. Okay, so those are the things you need to be concerned about for tonight. Whether or not you are trading intraday, whether or not you're trading intra-week, all right, whether you're a short-term trader, a scalper, a swing trader, it doesn't matter. FOMC meetings, it's basically just going to create another volatility. So we're not quite done with today. Okay, so that's that. Let's take a look at stuff from the daily perspective first, and then we will scale down a little bit. I think a lot of you, I think the first question was about pound USD. So we're going to go through pound USD. We're going to go through Aussie USD, dollar yen, and gold, basically before the retail sales number hits for the US. So right now, with pound USD, with cable, with sterling, we do have pivot at 1.2150. That would be your immediate resistance. We are still range bound, and I put a note out on the outlook this week that we are still within a range bound market condition, and it's just going to get worse. Right now, in terms of support, we do have a range between 1.2 to 1.2050. That would be your immediate support for pound USD. If there's a close below this support tonight after the FOMC meeting minutes, then we are likely going to be looking for a potential downtrend resumption in the pound USD. Momentum is already ticking down. This is no longer a neutral stance. We're kind of stuck a little bit with the Ichimoku cloud resistance. In terms of the range to the upside, we have 1.23. That's going to cap the market this week. Now we're really far from that. We have 1.2150 obviously, and then 1.23. Now how does this translate into an intraday perspective? So let's take a look at pound USD from an intraday perspective. Right now, this is actually within the Ichimoku cloud. Resistance intraday remains at 1.2150. Taking a look at the hourly momentum, it's quite irrelevant. It's still pointing to the downside, but we are basically within this cycle for FIPS. So we do have a little bit of support coming in around 1.2050. And that's basically your immediate support. If you're trading intraday, you definitely want to have this level there, because if there's an hourly break below 1.2050, it's actually going to transition to more downward pressure on the pound USD, but it's likely going to be limited at around 1.2. How far it'll go? 1.27.2%. It's actually at around 1.977. That would still be around 25 pips, just below 1.2. Okay, so 1.2 to 1.1975. That's basically going to be your support. If you're going to be going for a short, these are going to be your target levels. But right now doesn't necessarily mean that the pound USD is actually going to slide, because it's still within the Ichimoku cloud. It's still within 61.8 to 78.6. We do have support at 1.2050. Okay, so if you do have a short position, you definitely want to be watching 1.2050, because the deciding factor would be whether or not 1.2050 breaks. If it doesn't break, then we could be in for a scenario like this. Okay. If it does break, then great. We are going to be looking at a potential run towards 1.2. So if you are short pound USD, you want to be careful. If you're planning to go long pound USD, I don't think it's quite time yet. If you do want to go long, then at least make sure that price is actually outside of the Ichimoku cloud. So I'm going to zoom in a little bit. If you do plan to go long, you definitely want to see price actually transition outside of the Ichimoku cloud. And that's not going to happen until what? 1, 2, 3, at least 3 hours, right? If there's going to be a reversal after the US retail sales number, then we're likely going to see that. Then you definitely want to watch out for 1.21. So the scenario is this. I don't think it's time to go in for any position right now. So either you have a short position that you are adjusting your target, or you have a long position that you are adjusting your stop loss. But if you do want to go for a new position, then you definitely want to see price go above 1.21. Then your stop loss would be whatever swing low that is going to be. But right now, I'm just assuming that we are going to have our stop loss below 1.2050. In terms of target level, it's going to be at 1.2150. Risk reward ratio is not that great. Okay. So if you do have a short position, then adjust it accordingly. But if you're looking for a new short position, just want to remind you, your stop loss is actually going to be at that swing high there, which is very close to 1.2150. You definitely want to have it at above 1.2150. In terms of target level, your first target would be at 1.2050. Initial target initial risk reward ratio is not going to be pretty unless you're going to be targeting 1.2. Risk reward ratio would still be 1:1. So I don't think it's quite time to jump in yet. Doesn't mean that you cannot trigger any position. I'm actually currently just waiting for the US breakout. We had the UK breakout. UK breaks to the downside, obviously, but for the US breakout, we are not quite done yet. We just started the pre-market session for the US breakout. That is between 7 to 9 a.m. New York time. So that's going to be a breakout strategy if you're going for the US breakout. Previous session was to the downside, so going by that, then we are potentially going to be looking for a potential downward continuation from the UK session. But right now, this is the current range. Range-wise, it's still too far off, by the way. We still have, another hour to go. So, this could change, right? The lows could go even lower right now, but in terms of range, it's already within 40 pips. So if it breaks to the upside, again, we require a break above 1.21. For it to break to the downside, we require a break below 1.2050. So even if you go by breakout strategies right now, you're kind of in the middle right now with the pound USD. So pound USD, either you sit tight and just wait for market to give you more confirmation. Right now, it's just a little bit too unclear. If you want to play it safe, then wait until tomorrow. Wait until the FOMC meeting minutes is out. Wait until all the other traders comb it out. Then you can gauge the sentiment tomorrow. But if you do have a position in pound USD, then the current option is that. So adjust your position accordingly. I'm not too keen on looking at a potential return towards 1.2 because between 1.2050 to 1.2, it's going to be a tough move on pound USD. So in terms of, for those that have a short position, then you definitely want to watch out for 1.2050. So if you want target levels on pound USD, I can only give you two, and that will be at 1.2050, and then the other one will be at 1.2. So pick one, make a choice, whichever it is. Your stop losses are still going to be above 1.2150. Okay, so that's quite clear for pound USD. We don't have a clear sign on pound USD. We have 50 minutes. I'll try to jump in as quickly as possible. Next up, I think we'll just go to gold. I think there's a lot of requests for gold. I don't want to get spam, so let's take a look at gold. This is daily. That resistance at 1,800. It's still there. 1795, still holding on. So whichever you want, pick one. In terms of Fibonacci daily, we got 61.8. That's at 1790. So there's a lot of resistance right now in terms of gold. Momentum is already ticking down. Slow stochastic is not below 80 yet, but the moment it drops down below 80, then we could see a potential continuation to the downside for gold. In terms of immediate support for gold intraday, it will be at 1750. We're still going to be looking at 1740 and 1750 as a strong support there. But below that, we are going to look straight at 1725. Okay. So moving on to gold. This is current scenario. In terms of intraday traders, if you do have a short position in gold, I think it's about time you get out of gold right now because it's currently at 127.2. If you don't want to get out at 127.2, then lock in your positions to around 1772. That would adjust it above 100% on the retracement. But right now, in terms of gold, it's either gonna bounce off at 1768, but in terms of momentum, I think we could potentially drop down even lower. We are looking at around 1765 for the hourly on gold. So be mindful on gold. I'm not gonna be looking at any potential buy scenarios with gold. It's just not in my trading style. It's just not in my category for going short right now. It's below Ichimoku cloud. We continue to create a lower high. We continue to create a lower low on gold. So obviously, even if you look at it from the hourly perspective, the moment it break below 1783, which was the 8th of August low, the moment we break that, we tested a resistance once, twice, 3 times. This is about the 4th time it tested it. And it continues to break support. So I'm not going to be looking for a potential buy on gold. I would say either you keep your long short position with a couple of target levels if you want to adjust it to 1750, because we do have that potential for gold to go to 1750. But I mean, on an intraday scale, we are going to be looking, we're actually very, very close to support right now, potentially around 1765. For gold. So right now we could say that this is currently going to exit 127.2, so there's a likely probability this is just going to go for support at around 161.8% on the hourly time frame. So no on long positions. If you do have a short position, then adjust your target accordingly. Make sure your stop losses would still be above 1780. In terms of target level, you got 161.8 here, which is at 1765. Once it breaks below 1765, then if you're aggressive, if you hold on to your trades maybe for the FOMC, then you could be targeting around 1750 to 1750. Risk reward, then it'll make sense a little bit more. But again, if you are thinking of jumping in gold right now, your best case scenario intraday would be this. Okay, you could be risking $12 just to gain $5. I don't think it's quite worth it. That's more than double the risk for your potential reward. So I don't think it's going to be pretty. But yeah, I mean, if you're thinking of scalping gold, I don't know, because even if you're thinking of scalping gold, then your stop loss would still be at 1776. Risk reward ratio would still not be that great. You are still looking at risking $6.50 for a potential 540. So it's really up to you. I don't normally trade gold on an intraday scale like that. I'm more of a swing position, and I don't quite like how gold is reacting to what the FOMC is. There's a little bit of it's a little bit vague right now, but one thing for sure, this is no longer something of a safe haven asset scenario. I think this is more of a safe haven US dollar scenario. Okay, so I expect more bearishness in gold. I don't expect a potential bounce, but I mean, if you're thinking of going long, I'm not in for going against the trend with gold. Okay, that's my view on gold. Okay, we got 20 minutes before the US retail sales number. I think it's great if we can talk about the Euro USD. Okay, daily Euro USD, as I said on the outlook, once it drops down below 1.0250, it's actually going to be range bound between 1.01 to 1.0250. So that blue box that you see there, that has been unchanged since the 18th of July. So it's exactly a month right now. We are still looking at a range bound scenario for Euro USD, at least from more of a daily perspective. If you take a look at it from the hourly perspective, this is how it looks like. We basically have support between 1.01 to 1.0150. And then in terms of resistance, we got 1.02 to 1.0250. Your range of movement right now is actually just between 1.0150 to 1.02. So that's actually only a 50 pips range, right? So give or take, this is right now within the Ichimoku Club, but given a scenario, I would go for more of a range breakout. If it goes below, if there's an hourly close below 1.0150, then you want to be targeting 1.01. Simple as that. If it breaks above 1.02, then you are going to be looking at a potential run towards 1.0. So 1.0250. Okay, it's very clear cut. Goes above 1.02, go for 1.0250, and then this would be your stop loss. The lower side of the range will be your stop loss. So yeah, you only have that option right now, and it's quite clear cut in terms of a breakout scenario. We are likely going to be looking at that breakout scenario right now. Either the retail sales number is going to trigger that breakout in 8 minutes, or the FOMC meeting is going to trigger that. Or it could actually go both ways. Okay, so it could actually go down, bounce up, and then break the other range. Okay, so 3 scenarios. The third scenario probably wouldn't happen now. Okay, it's probably only going to happen after the FOMC meeting minutes, but that would be your scenarios on the Euro USD. It's range bound, unfortunately, or fortunately, it depends on you, because you could be limiting your risk, because either way, either you want to go long or you want to go short, your risk reward ratio is actually going to be 1-to-1. You got stop loss at about 50 pips, target at 50 pips, so option is pretty clear cut for once with the Euro USD, at least on the hourly time frame. That is, if you want to go long, that's going to be your target level. And then if you do want to go short, we are probably leaning towards more of a short scenario rather than a long scenario. But if you go for a short scenario, then this would be it. Risk reward ratio is going to be 1-to-1. So pick your preference. I don't have one right now. It's range bound. I would wait until either side breaks. So either it closes below 1.0150, then I want to go short, targeting 1.01, potentially even lower, because we have a lot of momentum. On the hourly momentum on the scale is actually really flat right now, unlike the pound USD. So be mindful with the Euro USD. It's still range bound. So wait for an hourly close below 1.0150, targeting 1.01, or wait for an hourly close above 1.02, targeting 1.0250. You got 3 scenarios. Either it breaks to the upside and then find resistance at 1.0250, it breaks to the downside, find resistance at 1.01, or the most likely scenario right now would be it breaks to the downside and then bounces back up at the FOMC meeting minutes. Okay, I'm just gonna update you guys on what the numbers are for the retail sales. US retail sales number for the month of July, we've got consensus of 0.1%. The previous number was at 1%. So if we have a number above 1%, that's going to be a huge surprise for the market. The US dollar could really strengthen. Pound USD buy, I think we quite clearly talk about Pound USD. I don't think it's quite time to go in for either of that right now. So take a look at Pound USD. I don't like a buy scenario would only happen if there's a break above 1.21. A short scenario right now wouldn't make sense because your risk reward ratio is just really bad. Okay, so you got to be really patient with Pound USD at least. So either Pound USD or Euro USD, pick one. I much prefer the scenario with the Euro USD. Just makes a lot more sense. Because it's in a range bound market at least. Okay, let me go through the questions before we jump into the the retail sales number. So there was requests on Pound USD. We got requests on gold. We talk about Pound USD. We talk about gold. We talk about Euro USD. Does it still have a buy position for intraday wise? It's pretty flat right now. If you're looking for a buy position, wait until it closes above 1.02. Sterling yen. We'll take a look at sterling yen. In hourly, is the bearish divergence valid? Okay, let me just quickly jump into the sterling yen and clarify that for you. Is the bearish divergence? Sorry, was that bearish divergence? Sterling yen. Is the bearish divergence valid? I do not see a bearish divergence on the sterling yen. So let me go through the next question. How do you verify your account? Maybe ask the customer service. Okay. Dollar yen, maybe a quick look at dollar yen right now. This was from last week's CPI number. In terms of dollar yen resistance, coming in very closely at 135.30 is actually at 135.25, but let's be clear on that. Okay, so we got resistance 138.25. In terms of resistance, we got 135.58. 135.60, so you're probably looking at around 135.50, around 135.60 to 135.75 actually. In terms of fibs, obviously there's a couple of fibs, but you might want to use a daily pivot. Your key resistance will come in at 135.69 for dollar yen. Okay, pound target level, we already talked about that. Open to long position on dollar CAD during the London session. Dollar CAD, let's take a look. We got 2 minutes. UK breakout, yeah. So looking at UK breakout, that's where you get in. I'm assuming it's at 19, which is around there. That's basically your entry. So your stop loss would be here, yeah. Stop loss at 1.2925. Sorry. Open too long buy position on the CAD during London session at 1.2850, yeah, which is here. And one more at 1.2950 for take profit 2. So you got two positions. This is one. The other one at 1.2925. Really aggressive. How do you open one at 1.2925? We haven't seen price at 1.2925 today. Or are you planning to? Either way, your stop loss is going to be there. In terms of target, you should get out. You should scale out one already. Risk reward ratio is already 1.5 on this one. So yeah, price haven't gone for 1.2925, or you're targeting 1.2925. So you got second target at 1.2925, I'm guessing. But yeah, I'd just be a little bit careful there, because you know, you are looking at around the range of 1.29 to 1.2925, so you should consider taking some out of that position. Okay, just waiting for data to come in. Okay, retail sales, it's at 0.7%. That is much better than expected. So we should be looking at a potentially. Hold on, let me just double check what's the core retail sales number. Consensus for retail sales is actually I'm gonna put it at 0%. Sorry, retail sales at 0%. Consensus was 0.1%. Month on month for July X Auto is 0.4. So I read it wrong. The retail sales number is actually 0%. It's actually slightly below forecast. The retail sales, core retail sales number is 0.7%. Consensus was negative 0.1%. So the retail sales number was actually lower than expected, but the core retail sales was higher than expected. That was actually quite a huge jump on the core retail sales. US retail sales year on year, that jumped up to 10.3%. So this is actually good for the dollar. So it should actually be good for the dollar. Okay, so let me go through the rest of the question there. I got a short position on Euro USD at 1.03. Is it dangerous for me to hold this position ahead of the FOMC meeting minutes? 1.03. You got a short position at 1.03, really high up. Have you scaled out of your positions? I think in terms of targeting, if you scale out, you move your stop losses. If you lock in something at 1.0250 or 1.02, at least lock in about 50 pips, then you can hold it. Okay, but if you don't have a lock on it, if you haven't moved your stop loss to break even, then it's risky. I mean, if you gone short on 1.03 and you're still holding on to that, right? That would be this scenario here. Your target level, where's your target level? You should be careful about 1.0150, or if you want to keep it for swing and then you want to target the lower range around 1.01, you could go for 1.0125. I mean, it's just 25 pips. I mean, you don't need to be super greedy on that. So either you target 200 pips or 175 pips, but either way, your stop loss should be at break even. Potentially even lock some of that profit. Maybe you want to move it to 1.0250. Let's lock in about 50 pips off, profit, and then let it run. Then that's completely fine. Just make sure that you adjust your stop loss, because it could be a risk-free trade, and you don't really want to risk that 175 pips. So it's really up to you. I mean, I would be pretty happy with 175 pips right now. Right now you would be at around 150 pips. So what's an extra 25 pips? Unless you're targeting 1.01, but if that's the case, then make sure your stop loss is at break even or lock in some of the profits. Don't risk it. Okay, let me go through. Major news impact, we just had one. We got retail sales number. Core retail sales was good. Monthly retail sales number was actually bad. Year-on-year retail sales is actually super good. It's actually at 10.3%, up from 8.5%. Okay, so anyone with dollar position, I think you're still good up until the FOMC meeting minutes. So in terms of dollar yen, there was a request on dollar yen right now. Keep an eye out on resistance too, around 135. I'll put it around 60 to 75. Just keep an eye out on that as potential resistance. But in terms of intraday levels, we are actually beyond target for intraday FIB targets, because I think this one, it's gone past 161.8. So you should already be out of that position. But I mean, if you go for the momentum, we might have a little bit of a momentum left. Just don't expect a huge one, because you are gonna bump into resistance in about 20 pips. So is it worth risking another extra 20 pips? Is it like, hey, maybe I could get another extra 20 pips? Is it worth it? I don't know. It's completely up to you, depending on where you get in, where you get out. If you just got in, maybe, yeah, I mean, that's obviously worth it. But if not, then think about it. If you're a swing trader, what is 20 pips, right? I mean, if you're a scalper, 20 pips is huge. But if you're a swing trader, 20 pips is not huge. It's not worth the risk ahead of FOMC meeting minutes. If you do want to hold on to that long position with dollar yen, just make sure you start adjusting your stop losses right now. In terms of support, you do have a few choices. You got 134.50, you got 134.25, you got 134. But those are going to be your stop losses for the dollar yen. Okay, let's go back to dollar Canadian. Let's take a look at that question. Can it reach 129.25? Very, very close. It went up to what, 129.18. I'll be honest with you. Is it worth risking? That's up to you. I'm not gonna ruin it for you, right? But if it was me, and if you're in this position from the UK breakout, get out. Because going by the UK breakout, you're supposed to only take 1-to-1 risk reward ratio, which is you should be getting out around 128.75. So this is extra. If I were you, I would get out of that dollar cat trade and then look for another opportunity. This is obviously, you're gonna bump into resistance very, very soon. You're right. Either you go for the 129.25 or you're gonna bump into the resistance at 129.35. So again, is it worth the extra 15 pips for that position that you have with dollar cat? I don't think it's worth it. I would just get out. I would be very happy with what I get from the UK breakout. So a lot of you guys with trading the UK breakout, you should be good, right? You should have a position already. Can we go short for Dow Jones intraday? Because the trend line support breaks in the hourly. Let's take a look at the US 30 hourly support trend line breakout. We are done with this one, yeah. Actually, I'll leave this one. I'll jump in here. So yeah, if you go by the US breakout, we got a new low right now. So this is your current range breakout, which is around 55 pips on the pound USD. Again, for you guys wanting to trade the pound USD, I would say be very careful. I don't like going long pound USD, not as of yet. We don't have any confirmation. Going short right now is a little bit too late. You're gonna you're gonna open yourself to a lot of risks. Okay, take a look at US 30 support trend line broken. Let's take a look at the support trend line. I think we have this support trend line from here to here extended. We haven't broken support trend line on the hourly time frame on the US 30. So be very careful where the support trend line lines up. It lines up with the Ichimoku cloud. So extreme caution is necessary for the US 30. This is the only current support trend line that we have, and that's the only valid support trend line. We got 3 touches, 1, 2, 3, and this is the only current support trend line. It's still line up to intraday. We are looking around 33,800. Break below 33,800, then you can say that support trend line is broken. But there's no hourly close below that. We don't have a broken support trend line on the US 30. So going short on the US 30, pretty risky. I know despite the FOMC meeting minutes right now, and that which is, which it could actually be bearish for this if the FOMC is really hawkish, if they prioritize price stability. Okay, so look out for that word. If they say their goal is for price stability, recession, if the concern for recession is not there or it's not huge, then that is actually going to be good for the US dollar, US 30. As a risk asset, it could actually be bad. Okay, but taking a closer look at this, where do we have pivots line up? We got support 1 pivot right now. So again, we haven't broken any support think we still do have a lot of support. If it does break below 33.80, don't be surprised if it actually found support at resistance support 2 here, because support 2 is actually the high for 11th of August. Okay, support 3 would be we need to break below 33,500, so you actually have a lot of support to the downside. So if you are planning to go short, excuse me, if you're planning to go short on the US 30, do so on the break below 33.80 and ideally below the Ichimoku cloud. In terms of target level, you could be targeting 33,500, or if you want to go by support 2, that would be at 33,600. In terms of stop loss, this would be your immediate stop loss. Risk reward ratio is not going to be pretty if you go for support 2 target range. If you go for 33,500, you could risk a little bit more, but there could be a scenario where the futures market actually bounces here before the FOMC meeting minutes and then go down. If that's the case, then you could have your stop loss a little bit lower at pivot, and that would make it worth the trade, because you're going to be risking 300 points to the upside, 300 points to the downside for the US 30. Okay? So I don't expect an extreme volatility or anything major like that, because in terms of VIX, it's actually pretty stable right now for VIX. It's picking up, but I'm not sensing any push higher or anything major. If it goes above 23, then yeah. This is actually pretty low. We're actually at a very normal level, which is around 19 on VIX. So if you don't know what a VIX is, it's actually the fear index. So for VIX, hovering around 2021, pre-market 2050, this is pretty stable for VIX, so I don't expect anything major. The only thing that you need to be mindful, it's actually dollar index. We talk about this a lot in the outlook. We know the support level for this one is actually between 105 and 106. We saw the index actually bounces off 105. So this is right now testing a little bit of a resistance around 106.50. But yeah, momentum could actually creep up. This could actually travel along the Ichimoku cloud here. So be a little bit careful with the dollar index. Again, if you don't have any access to dollar index, I would highly recommend that you get access to a dollar index right now, because if it breaks below 105, and that's where we really know the US dollar is going to be extremely weak. But until that 105 breaks, we cannot classify the US dollar to be weak. We're not going to be looking at any major trend change if the dollar index is still above 105. If the daily closes below 105, then yeah, we could potentially be looking at a potential trend change in the Euro USD, Pound USD, and stuff like that. Until that happens, until the dollar index breaks below 105, I am still not changing my outlook. I'm still going to be warning traders that, hey, you know what, as long as index above 105, between 105 and 106, be very careful. It's not stable yet in terms of dollar movement. Okay, if markets is concerned about global recession, why are they taking dollar as a safe haven? Because dollar right now, the FOMC is the only one hiking rates ridiculously. Let me give you the scenario. If the interest rates in the US goes up faster than in the UK, the Euro, the Aussie, or in New Zealand, if you want to place your money for investment, which country gives you that higher interest rate? We are talking about a carry trade right now. So the US is the one that has the most aggressive interest rate hike. Okay, that's the market where people are going to place their investment in, and that's why the US dollar is stronger, because of that global recession concern. If the whole world goes into a recession, okay, if I don't like that scenario, it's not within my calculation to consider this a global recession concern. I think it's a little bit too early. if it continues in September, October, then yes, I will classify that. But until that happens, it's not going to happen. We still have a couple of months to go. But would you put your money in Japan when Bank of Japan doesn't even hike the interest rate? Are you going to be earning a lot of interest? No. Are you going to put your money in China when they just cut interest rate? No. Right? Are you going to put your money with ECB? Or are you going to put your investment in Eurozone when they are not really that willing to hike interest rate? They're really forced to hike interest rates? Or you want to place your funds in United Kingdoms where you have a wishy-washy Bank of England, which only hikes interest rate by 50 basis points, not 75 basis points. Inflation continues to go up, which kind of defeats the purpose of investing there, because if you invest in cash, you're losing a lot because inflation goes up. Or you want to invest in the US where inflation goes up, or in fact, inflation has gone down a little bit, but the central bank is still aggressively hiking interest rate, right? This is where the proposition comes in. This is where the logic comes in. That's why there's a run to US dollar as a safe haven, because it's not a matter of long-term investment or short-term investment. This is how the market thinks, right? This is how, from a logical standpoint, this is what happened with trader sentiment. Okay, if they're concerned about global recession, then US dollar is king. It's always been the case. Right? And since they're hiking interest rate aggressively, hey, that's a plus. We got a lower inflation slowing down. That's also a plus. So my money is going to grow in the US. That's the logic. That's simple as that. Short-term traders doesn't quite care, or it doesn't click with this logic, right? It's irrelevant for them. Well, longer-term traders or swing traders or carry traders, this logic clicks. But short-term traders are going to move the market because this logic clicks. And to them, there's a benefit to that. They're afraid of the global recession. There's a shift between risk averse and risk appetite increasing, right? So risk on, risk off. We got global recession concern, immediately in the market, short-term reaction, risk off. Simple as that, right? If there's no global recession concern, inflation goes down, then yeah, it's a risk on probability. Simple as that. But that's how it works right now. We're showing signs, right? I think I might be late, but I only kind of catch on to that after the market reacts to the Chinese data on Monday. How there was a growing fear for a potential concern about global recession. And that's where the market is headed right now. So it's not really about inflation, how they're hiking interest rate and stuff like that. I think we are past that scenario. I think we are in a scenario of how severe the recession is going to be and how the FOMC is going to react to that potential recession. Are they going to continue hiking rates aggressively, knowing that the recession is coming? That's what the FOMC meeting minutes is going to be there for tonight. That's basically where people are going to pay attention to. That's what you need to watch out for. The key would be if they want to prioritize price stability, that means they are going to continue hiking rate aggressively if inflation continues to go up. The CPI number last week is irrelevant because this is the FOMC meeting minutes from the previous meeting, right? So these are words before that latest CPI numbers that we have. So FOMC wouldn't know that the CPI is going to cool off like what we had last week, right? The FOMC doesn't know that. So this is basically what FOMC had said pre-CPI. That's basically it. But short-term traders are just going to dig into this, right? Let me just classify. Traders are going to dig into this. They're going to comb through this FOMC meeting minutes. They're going to find words that makes FOMC super hawkish or slightly less hawkish. Okay, the word hawkish is still going to be there. FOMC is not going to be dovish. They are going to be hawkish. It's just how hawkish they're going to be. So again, my tip for you, If you get the FOMC meeting minutes tonight, read through it. Okay, if they prioritize price stability, it means they are going to be hiking interest rates regardless of the economic view on recession. If they say recession doesn't pose a risk or a huge threat to the economy, then that means they're still hawkish. It means they're going to hike interest rate regardless of the potential for recession concern. But if they say that they are very concerned about potential for recession, they might look into, easing off a little bit on the interest rate hikes. That would be bad for the dollar. It would be good for risk assets. When we classify risk assets, it would classify that the US equities is going to be positive if the FOMC is less hawkish. Okay, the pound USD is going to benefit from that, especially we had the UK inflation at 10.1%. Euro is going to benefit from that. Gold, I don't know. I'm not quite sure about gold. How is it going to benefit from that? Because it's going to be hiking interest rate, and that's still going to be bad for gold. But it's going to be very, very small, tiny words that's going to change how the market react tonight. And you need to prepare yourself for the FOMC meeting minutes. It's going to be critical for the week. Okay, after that CPI number last week, everyone's just going to look at this and see where likely the FOMC is going to be. Okay, latest survey, I updated some of you guys on Monday. It was 47.5 for a potential 75 basis point hike in the next meeting. No meeting this month in September. 47.5% probability of FOMC hiking by 75 basis points, 52.5% FOMC easing off a little bit, just hiking by 50 basis points in September. But, this number is going to change every week, but this is the current latest number. How about oil? With condition on Iran nuclear deal pending, we got oil down. I didn't quite jump in on oil. I wasn't prepared to jump in on oil yet, but I think we did talk about oil last time. I'm just trying to find a chart for this one. Okay, here we go. That was from the previous one. We are actually still within support, 82 to 85. So we still have that 85 support level for oil. Is it pointing to the downside right now? If you have a short position, I would say be mindful. I think, we could be looking for more of a bearish scenario, but we are within that zone between October to pre-war, right? That's actually between 82 to I can 82 to 87, but we have that here around 85, so we actually can adjust that there. So 82 to 85, you need to be very careful if you do have a short position in oil. Okay, need to be mindful if you have that short position in oil. If you are holding oil intraday, you might want to start moving your stop losses to around 92. That's more than enough. So you should adjusting your stop losses. If you got your entry around 91 or around 90, you can start locking in your stop loss to about 90.75. I think this would be the best case scenario. This was from what was it on Monday that we talked about this? It was on Monday. We talked about this on Monday's webinar. So if you guys don't know, we do have session on webinar. So we do have webinar session on Monday, but it's limited to just Telegram group. If you haven't joined in, please ask in the chat if you're interested in joining the Telegram channel. I do post contents in English as well over there. Okay. So oil, this should be very close to your target level, which is around 86, right? Either you move your stop loss to break even, or you move your stop loss here to around 87.68. The Iran nuclear deal, that's really pressuring this, and also the concern for global recession post-Chinese data. This is actually bad as well. So short term, we're not talking about winter yet. So short term, I think we are going to be looking at a potential more of a bearish scenario for US oil. I don't see any bearish bullish scenario as of yet. So we got support at 85. Below 85, we got 82, 82, and then 80, and then we'll see what happens from there. Okay. So you got your target levels. If you have a short position from Monday, adjust it accordingly. If you have a new short position here, then maybe you want to target 83, then you make sure your stop loss would still be around 90.75. Okay, risk reward ratio is going to be about 1 to 1.5. It still makes a little bit more sense, but it's really up to you on oil. Overall, I don't see any potential changes yet on oil. If you have an oil short, you can move it to break even. You should be trading risk free right now, or lock in some of the profits if you want to. Market is pretty wide enough to give you that range. Okay, my name, you probably just joined in, but on Euro USD, it's range bound. It's not going to go anywhere. This is the intraday scenario. It's actually range bound. So we got support, range. Once it breaks below 1.0150, then you could be looking at range towards 1.01. If it breaks above 1.02, then you could be looking at 1.0250. But if you've been following the outlook, it's been range bound since 6th, 17th, 18th of July. So it's still range bound. I wouldn't classify this as a downtrend continuation as of yet for the Euro USD. It is between 1.01 and 1.0250. It's still going to be range bound. How much do I earn? I don't know. Why should I classify that for you? It's irrelevant how much I earn because I run a business. Okay, but yeah. How much you earn depends on how big your equity is and how big your lot size is. I think that makes a lot more sense. You're asking the wrong question here. Okay, so we got about 4 more minutes. Any last minute requests on anything that I haven't taken a look at? I'll go through the chat just in case I miss anything, because I think I missed something on OZ. I read something about OZ. Talk about gold. Okay, OZ USD short. Help me find good take profit level. OZ USD for short. You're gonna be looking at 69, right? If it breaks below 69 on the daily, then yeah, I mean you can go for a little bit lower on OZ USD. But I mean, if you take a look at it from an intraday scale, you're looking at support coming in very closely around 69, 69.25. I think we are already at 69.25 for the support here. Okay. So you should be out from your short position for OZ. Unless you want to hold it below 69, then yeah, I mean the choice is always going to be there for OZ USD. Okay. Let me just ask Team Octa, can we have the link to the Telegram channel just for those that wants to jump in? I actually don't have the link myself, but pretty sure the team would have it. Okay, for OZ/USD, we haven't covered OZ/USD, right? So we're going to take a look at OZ/USD right now. This has daily pivot. We've passed support 3, so intraday short, you should be out from OZ/USD right now. In terms of support, you're looking at support around 69, so it's really coming there. If there's going to be a bounce at 69, I still wouldn't want to go long again on OZ/USD. There's just too much pain on the OZ/USD. Daily on Monday, we had that transition above the Ichimoku cloud, right? This one has pulled back more than 61.8, so very close to around 100% on this one. So we are actually 69.25 is actually where the 78.6% is. So we got the Telegram channel posted there. So if you guys want to join in, click on that link. Okay. So intraday short on OZ/USD should be out. I wouldn't want to be looking for an intraday short, but I could be looking for a short position once it breaks below 69. Then I could be looking for a potential, it's actually not 69. Let me just verify this. There's a shoulder. It's actually 68.75. If daily closes below 68.75, then yes, we could be looking for a potential return towards 67. That's around 161.8%. In terms of stop loss, initially it's going to be far, but I think it's actually safe to place it around 70.50 if we go for a swing short on Aussie. Initial risk reward ratio is going to be about 1-to-1. You're going to be risking around 180, 160 for 160 gain. How long did it take for me to get consistent in my lot size? I'll be honest with you, I got my lot sizes wrong. I don't have anyone to educate me when I first started. So I actually didn't trade a standard lot. My standard lot was actually 10 lot sizes, and that's what I thought as a standard lot. So I actually got used to trading huge lot sizes, which I don't recommend. I think it's a completely backwards mentality on this. But for me to get really consistent, it's not about the lot size. When we talk about consistency, lot size is kind of irrelevant because I don't count by lot size. I count my consistency by pip gains, right? By percentage gain from pips, not by equity growth. So yeah, if you want to be consistent with your pip gains rather than your money gains, because money gains would really would change. I mean, you could be trading mini lot and then next trade you could be trading standard lot, and all of a sudden you gain a lot and you think you're consistent. That's not being consistent. Consistent is being about your pip gains. I think that's a lot better. And the question, how long does it take for me to be consistent? I will be honest with you. It took me at least about 2 years to be consistent. I started in 2002. I don't actually. It will be 3 years because I don't really have a lot of consistency. I don't have a lot of confidence until about 2005. That's what 3 years of dedication. My equity doesn't start growing until my second year, which is in 2004. And between 2002 to 2004, I experienced 3 margin calls, and that's basically it. Okay. But again, look, back then, that was 20 years ago. 20 years ago, we don't have a lot of information. I think I was actually one of the first to actually do webinars in 2007, 2006, 2007. Aussie USD enough? It should be enough. How do you calculate gains from pips? What I'm doing right now is calculating gains from pips, right? I'm showing you the risk to reward ratio from pips perspective. I'm not saying, yeah, you know what, I'm doing this on a standard lot. I'm not aiming for $1,000. I'm not aiming for $10,000. No, I'll tell you right now, all the risk to reward ratio that we have right now is actually pip based. So for Euro USD, right, when I say 50 down, 50 up, as 50 pips to the upside, your risk would be 50 pips to the downside. If you trade on a mini lot, that means it's $50 up, $50 down. So if you're trading standard lot, that means it's 500 up, 500 down. So again, if you're trading micro, it's $5 up, $5 down. So I'm not counting by money. I do my trades. I do my profit, and I do my take profit and stop loss risks based on pips, not on monetary value. Okay, that's how you calculate gains from pips. Simple as that. So just don't think about the dollar value. Just think about the pip value. That's how you could calculate a much better risk to reward ratio. You could better manage your risk tolerance, your risk psychology or basically your risk management based on pips, it's going to be a lot better if you count things not by dollars but by pips. You want to be consistent in trading. It's not the monetary gain, it's actually the pip gain. Simple as that. Okay, I think it's time that we have for tonight. So let me just remind you guys again, for those that just jump in, what to watch out for with FOMC meeting minutes tonight. Price stability, if that's going to be the main focus. If they're not going to be, if they don't take potential risk of recession as a high risk, then that's a hawkish FOMC, right? That's going to scare the market. That's going to bump the US dollar up. If the FOMC say they are concerned about a potential for recession, they might ease off on their monetary interest rate hikes, then that's going to be an FOMC that is less hawkish, and that could benefit risk assets like the US equity market, which is the US 30 Nasdaq S&P 500. That could benefit the Euro USD, that could benefit the Pound USD. It might not benefit gold, so gold could be in a completely different scenario, so be mindful. Those are the only two outcomes in terms of inflation concern or recession concern. As I said at the earlier of the session, I think I spent about 10 minutes talking about inflation and recession. Right now, there's a growing concern for global recession. That's basically the outlook that we saw from the UK CPI number. UK CPI was 10.1, which is a lot higher than the previous one. But market didn't take that as a bullish sign for the sterling. In fact, they took that as a potential risk on a global recession because inflation goes up. Pushed up by energy prices, that could make a recession even worse if that would happen. Okay, because we had a GDP number that's from the UK last week that was actually not that great either. It was actually close to about consensus. Okay, so that's about it for tonight. Good luck for your trades tonight. Adjust your positions wisely. Don't rush into things. If you're not confident with, if you're worried about the FOMC meeting minutes affecting your trades, get off your trades. You know, is it worth chasing that extra 10, 15 pips that you guys asked me just now? Probably not. So be happy with whatever you had gained. Other than that, if you're not confident with the FOMC meeting minutes, stay out of that until it clears off. Okay. Thank you all. Have a great evening. By the way, we are starting a new webinar session on Friday. This Friday, we are going to talk about momentum and volatility on Friday. And I think this is the first time ever that I actually talk about it in an English session. So I hope to see you on Friday. Don't forget, it's for all beginner levels. And I think it's really great if you understand momentum and volatility in the market. That way you can figure out divergence and stuff like that. It's actually good. That's going to be on Friday, same time as the webinar today on Friday. Don't forget, it's on the 19th of August. It will be on Friday. I'll see you there.